I should be back online. Let me know when you guys can see me. All right, so let's take a snip of this. Let's put this in chat. These are our targets. Downside targets on in Q. Okay, let's wait for everybody to jump back in. Everybody's back in. Awesome. Welcome back. If you're enjoying the content, I'm grateful. I'd love for more people to be able to take advantage of it. So if you want to post that you're watching, you know, I don't want to go out and just start posting a bunch of stuff and then people kick me out. You know, I really just want to share knowledge. So if you're talking to people in different chats and you want to show them or you want to tell them to come, please do. I'd appreciate it. And then subscribing is also cool too, because it lets me know that people want to watch it. And then I'm also going to be replaying a lot of these. I'm taking like 60-second clips of kind of the key thought processes, which is every time you see that thing pop up where you pick the instrument, it's because I put my my macro, my hotkey as Shift R, and for some reason Shift R is record, but then it pops that up to look at it. So I need to fix that, but I'll do that later. So, and then if you press like on the stream as well too, it's kind of cool, and comment, do all the stuff, help me out. All right, so now let's look at upside. So let's say we hold this trend right here. Okay. Let's say we hold this trend. I'm going to hide volume profile real quick. Okay. So let's say we hold this trend right here. So a couple things we need to look at first is we have this entire move up to fill back up to 25,631, which is where we'd look for a retest of, right in this area. The reason why we retest this area is because this is where we had the first price displacement from our previous hourly or 30-minute candle. It's right in this area right here. So 25633. Anytime you've seen any sort of economic events that causes a big swing in price, for example, you know, CPI or PPI, whatever it is, you see these big moves down, you notice that most of the time it will reverse back up into this level where we had the breakaway. And so you always want to put this area right here, which is the retest of the price displacement candle, which is right here at 25633. So we always want to, that always needs to be a target. It's kind of like trading a gap strategy, but instead of seeing a gap on the actual chart, you're trading the price displacement gap. So you're asking the market to go back and fill the gap to the price, where now the market can agree on the price. People can then defend this position again, and then it can continue back down in a certain direction. And we see this happen pretty frequently. And we can look at some examples of that in a little bit as well too. But this will be our first target, our upside target, if we get there. So next piece we want to look at is where do we have some of our key support and resistance levels. So this is a key area right here. So you can see here, we've had a lot of swings right in this area. And we held it on this pullback here. So on the long side, if we gap up, which if we do gap up, we'll probably gap up over this level right here. That's important. This area now needs to become support. So this resistance that we've had, right? This area right here has played as support and as resistance multiple times over the last, God knows how long here. Take a look. Look at all these levels where we've held on a hourly time frame. And I think if we go to the 4 hour, we'll probably see some more dominant areas. Yeah, so 4 hour hold support, 4 hour bottom right here held as support. We pulled back this area, held as resistance. We had a gap up right here. This is a gap retest right in this area. We held right here on this 4 hour before we broke away. So resistance broke here. Right here, another piece of resistance. Right here, another piece of resistance. So this area right here is a very good level for us to use as an inflection point. And what an inflection point is where the market decides to take direction. And usually it's a range, like you'll get some sideways price action, and the market will pick the direction out of this inflection point. And knowing where these inflection points are will help you to wait for price to get into that area and then decide if it's going to continue up, right? And in this case, continuing up would be filling this price gap back up to the 600 to 622 level, or if we break below, back it, which we have done here already, which is why we did the bear thesis first, is coming down to this area back down here. So what we want to do now is we want to just make sure that we understand that as long as we are trading in this area right here, the direction is unknown. While you're trading in an inflection point, you still will not know what direction to take. So don't think that just because we get back into here that we're bullish. It's not necessary. I mean, it's not necessarily what's going to happen. But it's a good place for us to now keep our eye on it to see where the market wants to take its direction, right outside of this inflection point. So if we break over this, we've got some big movement up here to fill this gap up to here. We also have this downtrend that was created on the 4 hour based off of these two bars here. We always want to draw these. These are extremely important. They're important levels to have. Price will magnetize to it. It will retest for a third time. And then as you go to the smaller time frames, you can draw them a little bit better. So let's go to the 30-minute. And we have this swing. Let's remove this. From here down to here. So we're pretty much already there. We are pretty much already there. So right here on market open today, we'll be right in this area. And we may just gap over it. Or we may slowly move into it and then hold and then pull down to do our secondary leg on this larger trend that's been created. So this area is more important as well. I'm having a tough time on the bull side today. I don't know why, because there's so many things lining up right now that's telling us that we're going to have a continuation down. Like this trend, for example, once it gets retested, there's a very high likelihood that the third test, if we don't gap up over it, and let's draw this trend better. Let's go to the smaller time frames. We want to draw it as good as possible so that we have less price slippage. Interesting. So on the smaller time frames, it says that it's already been broken. But we have this area right here, this candle, that has created this trend. So the 1 minute will always be the key thing. So we see this, we have this downward trend movement. We have this area right here. So I would draw this like this. And now this is my trend. The 1 minute is always king when it comes to trends, because when you look at the 4 hour or the daily or whatever, it's good to indicate larger trends, but it will not tell you specifically what price point or where the trend is on the lower time frames. It will just tell you that it's there. You've got to go now down to the smaller time frames to pinpoint where the candles actually are. And 1 minute tends to be king when it comes to just pinpointing trend lines perfectly. And as you can see here, we have 1, 2, 3 perfect hits of this trend line. That validates it for me. So now the question becomes, are we there yet? And we did. We already broke it. So that was actually this move down. We already broke it. So I'm not seeing any trends in play to the downside anymore. It looks like we've already broken them right here. So now we ask ourselves, from a Fibonacci perspective, if we have a retracement, where are those retracement levels? Because we already had this downtrend. We tapped it here for the third time, broke below. This is why we had that hard move down, and then we broke out of it. So a couple things here. Let's do a retracement, and let's see where it lines up with. There we go. We held the 382 on this pullback, so this would have been a good level for us to short from. We still have the 50%. We still have the 61.8 that lines up perfectly with this area right here. So I would draw this as a good area for resistance as well too. A lot of levels to the upside that we need to reclaim. And some of these levels are pretty strong. So upside thesis, really, these would be our profit targets. This is where I would see where we're going to get price consolidation and then pick a direction. But as of right now, everything here is telling me that we are probably going to continue down if we don't gap up. If we gap down and we held this level right here, the 38.2, we already did our extensions from the bear side to the downside. So we know where our targets are. We held the Fibonacci here on the retracement, which tells us that this trend is respecting Fibonacci. So that means that our extensions will be valid if we do break this low. And those are going to now be our targets to the downside. Can you explain how you understand? Where can I learn more about it? You just stay here in this chat and I'll teach you, man. A lot of these things, and I didn't really learn this from anybody. I just want you guys to know that nobody taught me this stuff. I just started randomly just like testing different indicators in the market and seeing why we were pulling back to certain levels. And then I read a book. I don't remember the name. It was a long time ago. And it talked about number sequences and how algorithms run off number sequences. And Fibonacci was the one that, Fibonacci, for example, is like, it's not just a number. Somebody else can explain it to you on. So let's go to ChatGPT. Explain the power of Fibonacci. Let me read it to you real quick, because it's not just about trading. Fibonacci is a universal mathematics. So I'll just read it to you. The Fibonacci sequence is a simple pattern with surprisingly deep influence across nature, art, biology, architecture, and finance. Its power comes from how closely it mirrors natural growth and human behavior. The sequence starts like this: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, and each number is the sum of the two before it. As the sequence grows, the ratio between numbers approaches 1.618, known as the golden ratio, 1.618. So why is this powerful in nature? Fibonacci appears wherever growth is efficient and balanced. Leaves, sunflowers, shells, and hurricanes, human body proportions are based off of Fibonacci, because spacing allows for maximum exposure, balance, and efficiency, which is nature's version of optimization. So if you think about that in the market terms, in the market perspective, it's very similar. Fibonacci allows for maximum exposure, balancing of markets, and efficiency of price, which is the market's way of optimizing itself. So you see this in art, in modern design, photography, music, storytelling, and humans tend to behave in repeating patterns. So the common levels we trade are 38.2, 50, 61.8, 78.6. And these areas often act as support and resistance, pullback zones, decision points. And the greater thing here, the universal principle of Fibonacci, which I like this explanation, is that growth is not linear. It expands, contracts, and it stabilizes in a rhythm. The market moves in a rhythm. And you've got to understand this rhythm, right? It's a healthy rhythm, and it must happen. We can't just have parabolic moves up. We have to have healthy pullbacks. We have to have healthy movement. We have to have larger expansions. And because when something grows too fast, it has to pull back. And when it pulls back to a healthy ratio, I didn't even read that, it continues. And this applies to everything in general. So one other thing when it comes to Fibonacci that was interesting, how rat reproduction and Fibonacci, and this is something I read a long time ago. So look at this. Rat reproduction mirrors Fibonacci growth because overlapping generations cause each cycle's population to equal the sum of the previous two. And so what they learned in this test that somebody did, Fibonacci test on rat reproduction. It's very interesting. And I put this in one of my trainings I did a long time ago, is that they were able to basically predict reproduction through Fibonacci. It's basically a part of like reproductive processes. And when I started reading into this stuff specific to Fibonacci, I started realizing like this is bigger than just a tool, right? This is a way that the universe moves and the market moves. And then as I started using it and using the indicator, I started realizing that everything respects these levels that play out. These levels are extremely important. And so you could go back to any sort of trend, for example, and this is why it's so important to back test what happened previous day. Is like, so for example, here we had a parabolic move up here. So then what I would do is I would start asking myself, like, why did we pull back to this level? Yes, we have a support here, but is there anything else that caused us to hold this level right here? So I would draw my Fib level from here to here, and voila. The start of the swing, the end of the swing, Fibonacci level 50% held perfectly. And then we had our extension. And I just started seeing this happen more and more and more and more and more. And as I kept testing it, more and more and more. And what I realized was that there were certain times where I just wasn't drawing my lows and my highs correctly, right? Most people will use an indicator and they'll say it doesn't work, and that's because they're not using it correctly. I have gone through hundreds of if not thousands of different trends and pullbacks and supports, and I have looked at the extensions, and I've looked at the retracements, and I've found that where they hold best, and I've started using it, and it works all of the time. Very interesting. Thank you. Can you explain how you understood the specific zone? What specifically, Hop, are you talking about when it comes to the specific zone? Give me 1 sec. I gotta grab my baby monitor. Hold on. Okay, so that's a good question. So let me turn this down. Okay. So when we look at price separation, so you always want to look at price displacement as some people call this like fair value areas where there's price display. I just call it price displacement. And the reason being is because this is where you have big sell orders that displace the price, or big buy orders that displace the price. Then what happens when the price comes back to this area is whoever took those trades, that becomes where they want to defend their position. That's where they want to get back in. And so if you look at, and you don't want to look at them on the 1 minute. You typically want to do higher time frame. So I like the hourly for price displacement. So right here in this area right here, where we had this support, we broke right through it. So this area right here, we had the highest price displacement for that, for the move down on Friday. And I can't tell you why this happens, but all I know is that while I've been trading, I always look at these levels as areas where price wants to be defended in whatever direction it's trading in, and it's very good for first scalping, getting at least 30 to 50 points out of the market and being able to get in and out, because sometimes they do break. So I just want to make that very clear. Sometimes these areas do break, but we do typically bounce off of them for a small pullback, consolidation, and then a break above these levels if they are to go to the upside. But so for example, let's see other areas where we had this happen. So right here. Right here. So we had the 1 hour breakaway candle. Right here, we came into it, we held it, we pulled back down 177, 380, so 200 points. Then we held this upward trend back into this flat top, and then we broke out of it, right? And the reason why these big candles happen, is because it's breaking out of a key level. There needs to be large orders to break out of these key levels. And that's when you see these high volume breakout bars, because it's breaking through something. And that's something that people need to just constantly be reminding themselves of. When you see large candles with high volume and you see both of them happening simultaneously, it means there's a key level that's being broken. And once you identify that key level that's being broken, whether it's a trend that's being broken or whether it's a key supply and demand zone that's being broken, you must chart it on your chart. And if price comes back to it, you must take that trade. You must take that trade. That's the best risk to reward trade for you to take, because once you take it, your invalidation becomes much easier. Your risk to reward becomes much better. So if price came back to this area right here, I would take this trade in a heartbeat, 100% right here. And let's see if it did at some point. Right here. So you see this? Bounce here, 429 all the way up to 787, 300 point bounce right there. And this is the same as trading the trend retests. It's very similar. So when we have these I call them order block zones, where we have large order blocks because people are, the whales and institutions are taking trades. When we have areas like this, you always want to mark it, and when we pull back to it, you always want to take the trade. Always. I mean, it's not even a question. Now, only on the first time. Once price moves back to that area for a second time, there is a higher probability that that area is going to break. And it becomes invalid. I've noticed that these types of retests tend to only stay valid on the very first retest. It's the very first move. So hopefully that answers your question. How do you identify these levels while trading in the market is moving? I have a difficulty in understanding why you expect that area that you marked in the first place. Is it off the structure? It has to do with volume. So you see this bar and how it has high volume. It means that we broke out of a key level that needs to be retested, a supply/demand zone that needs to be retested. Volume is key. Volume is key. So we can look at this on the 1 hour time frame as well, but the main thing to look for is breakaways with high volume that have not been retested yet. So here's an example. Let's say this broke. Let me draw this for you. Okay, let's say we broke down here and then we held the support here, and then we came back up here, and then we went back down. This level no longer matters anymore. Doesn't matter anymore. Why? Because we came back in and price retested and validated it and then moved it back down. When there is a gap in price displacement and we do not go back to validate the price, which is right here in this area, we will at some point go back and validate this price. This becomes a very good level for us to move back into. So you can use it in two different ways. You can use it as an upside price target, or you can use it as an area where you want to take a short position and hopefully it continues down, but you at least scalp it and then you can leave a runner for continuation. So let's look at this on a smaller time frame. I can give you some more examples. Or actually, let's stick to the 1 hour because I think I like the 1 hour a little bit better. That's the best way for me to explain it. I don't really have another easier way to explain it. The best way I have to explain, let's see one that's retested right away. So this one here, you see how we have price displacement, but we didn't retest this level. So again, we have a 1 hour price displacement here. If you look at this was an after hours candle right here. So relative volume on the after hours candle was almost 2 times the candles before it. So that means that this was a dominant level that we broke down before that we need to retest. So we draw this area right here. This came up, but it did not retest this level. It has to retest this level. It has to. So this did not come. And now if we move over, let's go to over here, you can see how we reacted at this area right here. The first retest of this area, then we had a move down. So I'd love to say that I can explain to you why this happens, like why it does this, right? I can only explain to you what I'm assuming, and I'm trying to explain it in that way. But I've just seen this happen so many times that I use it now and it works a good majority of the time. Now there is some, like I said, like look at this slippage. We have 20, 30 point slippage here based on the trade. So when we get to these levels, you've got to be aware of that, and you want to look for reversal divergence. So if we go to the 1 minute time frame where we had that happen, you can see that we had reversal divergence. Okay, and reversal divergence is using your indicator to tell you whether or not price and your indicator are doing the same thing or they're doing opposite things. So right here, if I'm using RSI, which is my favorite one to use, but you can use any indicator. You can also use volume, which we can go into a different day. But we have our first peak here, first dominant peak here, second dominant peak here, and then third dominant peak here. Then if you look down here, RSI peaked at this swing, it dropped on the secondary swing, and then it significantly dropped on the third swing. So this is how now you can time your trades, is when we get into these key levels, we typically don't do a V-shaped reversal. It happens, but it doesn't happen very often. We usually get price consolidation, small algorithmic moves up into these levels, and then we get our reversal that happens after that. So this would tell me on these dominant swings, and I always wait for the third swing, by the way. That's just how I trade. I look for the third swing because I'm trying to make sure I don't get stuck on this first area right here. And as you can see here, peak, 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 weak, and I would say, hey, this is where we're taking the trade, 25,910, 25,915. Price is diverging. You guys have told me this before. We're at a key level. Now I'm going to take this short, and then I'm invalidated if now RSI peaks outside of this area. So if we get another swing up here and then RSI, all of a sudden breaks this high, well, that tells me, okay, I'm invalidated, and that does happen sometimes, right? If we're in a trending market, and we're just going to continue up, and we're just going to break all of our key levels, that does happen. But you've got to find a secondary indicator that lines up perfectly with your price levels, so that you can have higher probability of success, better risk to reward management, and you can stop out of your trades much easier. Yeah, I always look at price displacement. That's always the first thing I'm looking for on the larger time frames. So when I'm doing my analysis on the daily, for example, I'm looking for, so for example, if you look at the bounce we had right here, I called that out like a week before. And the reason why I called that out like a week before was because I saw this price displacement here, right here. I saw this price displacement here. And this area became my level of, hey, we need to pull back to this area. And let me show you guys. 24850. And I did it like a week before it happened. I said, this is my downside target. This is where I want to take a big trade. And I'm showing you not because I'm trying to like toot my own horn. I just want you to see what my analysis was and why I did it, because I did post a picture of it. What day was that? That was December 11th. I think it was right around here, December 15th. Hold on, Sunday, December 14th. Let's go to that day. From filter to a date, and I can show you how I analyzed it when we look at it. December 14th, after December 14th. Okay. Okay, that one's not working. Give me just a sec. Let's say before December 17th. Is that the date? Yeah. It's coming. Hold on a sec. You don't realize how much you actually talk in chat until like you go back and look at your messages and you're like, shit, man, I talk a lot. Maybe you should shut the fuck up. I'm just kidding. See, now look at this. Okay, so let me share this with you. So this was my analysis for that week. Right here. Go to this message. Okay, so take a look. So this was on December 14th, which was, if you look, this was the 17th. So December 14th, price was up here, right here. So we were up at 25,400. So about 500 points away, 600 points away. And I do this at the beginning of every week. So, so this week's analysis, I'll put it all together for you. So I explained it. We had the 50% retrace on the 4-hour time frame, which came right around this 24,886 level. We had Friday's 1-hour extension that aligned with this level as well. We have an hourly supply zone right here. We had a breakout, which I showed you guys, hourly supply zone, and they all aligned at one area. So the downside target at that given time, when we were at 25,000, it looks like 200 is where we were at. My downside target was 24,870 to 890. I put this on 12/14 at 7:40 a.m. Where did we bounce at? 24,878 on the dot, right around here, right on the dot. 24,890, right on the dot, and I did not edit it, and that's because I aligned 3 or 4 different indicators to make sure that the area that I have was a key area. My baby's awake. Let me go grab her real quick and bring her back. understood the concept. I can't understand how they exactly respond the price placement in the first place. So these levels almost remind me of yeah, exactly. These areas are basically what people call fair value gaps. But I looked at these before anybody like named it as that, as areas where I noticed where price tends to come to and retest and break away. And I just learned that just based off looking like, hey, why did we bounce to this area? What am I noticing from these smaller levels? So that's that. So I'll leave you all with that for now, is look for these levels, see how market reacts to it. You can go back and test it. And the way you test it is not by having a back tester, just go back and look at where we have price displacement and see how we reacted off of it, and look at what levels are stronger, how volume reacted to it. And as you do this more and more, as you get more and more repetition, your subconscious mind starts storing these memories of what you're seeing. When the market reacts a certain way, then eventually when you're just trading intraday, you start noticing these things. Like you just start noticing them. You're like, okay, we're moving directly to this level. There's a reason why when you see some of these other folks that stream trade and they have the higher time frame and then the lower time frames next to each other, the reason why they're doing that is because they are a good majority, not all of them, but some of them are looking for these key areas so that they make sure they don't get stuck in the middle of a range, right? If I know that this is a key area right here, right up here, where we had the start of our breakaway, where we had a high volume separation pre-market, then I'm going to make sure I don't take a trade right here. Like, why would I take a trade here when I have nothing here, right? Why would I take a trade here? If anything, I could take a long position on this pullback because I know it's going to go back up to this level. There's a very high probability we're going to move back into this level, which is a supply/demand zone, and I would wait for that trade. So the purpose of understanding these levels is not just to take trades, and it's also to make you feel more confident of not taking a trade. Because the risk of trading is knowing when it's okay to take a trade and when it's okay not to take a trade. So that's what I want you to start practicing. Start practicing not where should I take trades, where should I not take trades? And as you understand these key levels and you start mapping them out and putting them around, you'll start becoming more confident in not taking trades, which is the biggest reason why people fail, is because they don't know when not to take a trade. So focus on that piece. Focus on identifying these hourly, 30-minute hourly areas where price magnetizes to, and make sure that you're not taking a trade within an area that doesn't have something that is identified as a key area of a point of interest. And as you do that, you'll start noticing things. And if you want to take the trade, take it. Use 1 micro. Worst case scenario, it goes against you $40, you get out, that's okay. You know what I mean? But as you're practicing, go very low. You still want to use real money and or your funded account. You still want to use that because you've got to get used to taking trades with capital, not paper trading. But just make sure that you just study. Like, go back and start mapping stuff and look at stuff. That's the main piece right there. So I want to look at silver real quick because I know everybody's wondering what's happening with silver. Before I jump off, and then I'll jump back on when the market opens. But so here's the concern with silver, y'all. We can look at this right now, but we have no idea what's going to happen at market open. We have no idea. We could gap in any direction. We can start just breaking supports. We can start breaking resistances. We don't know what's going to happen. Do we look like we are in some sort of bullish pattern? Absolutely. Do we also look like we're in some sort of bearish pattern? Absolutely. Silver right now is just looking like it could go in either direction. If you look at this candle down and we do a retracement from it, where are we at on the retracement? We're right at the 50% retracement, right? So this is a key level of interest that we're already at right here, based off of this breakaway candle, 50% retracement. Now let's take a look at the move from the large candle on the pullback. Where are we at on that retracement? So this one has a little bit more space to the upside, which lines up pretty well with this support, resistance turn support right here. So 72.550 from this move down will be the area that we need to break over for us to see some continuation here. Let's go down to smaller time frames. So as we move up into this area right here, which if you can see right above this, we have some price displacement. So right around 770 to 600, really, that's a very small area. This is the area that we're going to watch to see what happens. If we gap up and break over this, we don't have a lot of dominant supports up here anymore. Dominant resistances up here anymore. We already broke out of this trend and retested right here. We have this trend right here that's holding for now, right? Remember what we talked about, having upward, if we see upward candles holding, so right here, we have these upward candles holding that held this. We want to draw these. These are important things to draw. They're very important. This is the trend that we're holding right now. So do we gap below this trend, come back and retest these lows? Do we gap up over this key level right here where we have our 50% retracement and then continue higher? Do we open at the same place, move up into this 50% retrace and then break down, which if that happens, we're looking at an extension from this 50% retrace, 100% extension brings us back down to 69.290, which is this exact low. So that's some good confluence right there if you tell me. So I will mark this area as an extension level. And I love it when my extensions line up perfectly with other key candles. Like this, for example. Like our 100% extension lines up perfectly with this, which could create a double bottom here for this area right here. So like this. Like that. So that's a possibility. To the upside if we continue up. So let's see if we held on Fibonacci on this move up. Doesn't look like we held on Fibonacci on this move up. So I don't look at this as valid when we had this breakaway because we didn't hold on any Fibonacci. So I'm not seeing an upside extension being as likely as a downside extension, because if you look on the downside, like I said, this 50% level is going to be extremely important for us. The 72.5 area is going to be very, very important for us. So that's what I'd be looking for. What's going to happen at 72.5? Whether or not the market's going to gap up or gap down. Are we going to break this micro trend right here and gap below it and then retest these lows and then break it and then come down to this extension level of 69.3? Is that possible? Absolutely. Before we make another move back up and then become really bullish again. So I can't really analyze this because I don't know what's going to happen, but I do think we're going to gap in a direction, and we're going to have to just wait and see when the market opens. Here's what I'd recommend. Don't take a trade when the market opens. If it's going to move in a direction, the first thing you want to wait for is a breakout and then a hold of a key level that we just broke out of, and then continuation. When you see your first swing hold, then you can take your first trade. But until we see the market hold some sort of support or resistance after an aggressive move in a direction, we don't know what's going to happen. And so we should not be taking any sort of trades until we start seeing key levels holding and volume increasing as we're moving into that direction. Thank you for yeah, absolutely. And feel free to share it with folks. Again, subscribe if you haven't subscribed. I do this 3 times a day. Sundays, I do it for the market open. I do it at 6 a.m. Pacific time for New York open. I usually jump on midday, and then I'll do a after hours for the following day as well too. So 3 times a day, really just using the same things that I use typically: RSI, Fibonacci, price action, volume, and trends. So if those are the things that you enjoy learning, and also if you're not in our chat, feel free to ping me. We have a Discord chat where we have a bunch of people from TOPSTEP that we noticed knew how to trade, like they knew what they were doing. They're profitable. It's called Corvus. We post a lot of our stuff here. We have Bookmap streaming all day long live here for NQ and silver. So if you want to join this, it's fine. But please, if you do get an invite, please don't, say full ported open, because we just don't like that stuff. It's very draining. We just want to focus on technical analysis. Where are we lining up? How do we take the right trades? How do we share good information? So message me on Discord if you want to jump in, totally fine. And also, last thing, please share this with anybody else that wants to learn. My only ask is, I'll never tell you guys to give me anything for this. I just want to continue sharing knowledge, and I want to blow this up so that we can all win together. That's the main piece for me. So with that, I will jump off, and I will see you guys in a few hours at Market Open. So just set an alert for yourself, or put me on alert so you can see when I jump back